Good afternoon, everybody. This is James with 77 Financial Group. You're listening to 15 Minutes of Finance, where in the next 15 minutes, I bet I can get you excited about investing. Let's do it. All right. Happy Tuesday, everybody. We have an emergency episode. We got some news. We got to cover it. I'm feeling it. The vibes are out there. It's time to talk about what's going on because there's a lot of fear, a lot of FUD, a lot of volatility. Let's just cover it, okay? So we're going to go over why, and this is what I've done all day today, guys, is I compiled a list of 5 different reasons of why the tariffs are not bad long-term and why actually it's helpful for the market, okay? And by long-term, I don't even really mean long-term. I mean end of year, okay? Long-term is typically 1 year or longer. Kinda. I mean, that's super subjective, but in the sense of market crashes and so bear markets, bull markets, a year is a fair assessment. Okay. So we're going to go over those 5 things. I'm going to give you guys sources of where I found everything. You guys are going to be able to know that I did some due diligence, got you some answers and some things you can rely on to not be dependent upon your emotional response to the daily market movement. Okay, when you look at something every single day, you get way more attached when things don't go well. Okay, it's like losing weight and you get on that scale every single day. Sometimes the weight goes up, okay? But over the grand scheme of things, as long as you're healthy, as long as your habits are right, the story stays the same, you're going to lose weight. Okay, so let me read the news first from today, which I haven't read yet, by the way. We're going to read this for the first time together, and we'll dissect it, analyze it, have an opinion on it, and then I really want to give you those 5 things. Guys, 90% of my job, especially during tumultuous times like this, is therapy. It's kind of, I don't want to say use the word morbid, but it's contrary to what you might think. You might think I'm trading constantly, but no. The portfolios we design are things we believe in long term. And so it's just talking through why the plan is the plan and trying to keep people from reacting to this FUD, this fear, this volatility. Okay. That's not to say that we wouldn't make changes if we thought the story changed. Okay. If the story for a company changes, I will be on top of it. I don't want to guarantee anything, but I read this stuff daily. I'm very familiar with it. And then we also just got to go briefly over NVIDIA's returns from the 27th or the 28th. I can't remember when they gave earnings, but I have to go over that because they were phenomenal. And yet here we are, NVIDIA not doing well. So let me explain. Let's go over the news. And then I can't wait to go over my research with you that just verifies what I've been trying to tell you. Okay. So let's do this. Stocks closed sharply lower on Tuesday after a late day rally fizzled as businesses and investors assess the impact of newly imposed U.S. tariffs against leading trade partners. The Dow Jones Industrial Average and S&P 500 shed 1.6 and 1.2 respectively, while the tech-heavy NASDAQ fell 0.4%. Very rare that the NASDAQ falls. NASDAQ's responsible for a lot of the growth in the other two, and yet it's now less when it drops. Interesting perspective. It was the second consecutive day of big, broad-based declines for the U.S. Amid growing concerns about the health of the economy and uncertainty about the impact of Trump administration policies, the S&P 500 and NASDAQ have now given back all of the gains they posted following the presidential election in early November. Overnight, the U.S. imposed long-awaited 25% tariffs on Canada and Mexico, while doubling the levy on goods imported from China to 20%. Beijing and Ottawa quickly announced retaliatory tariffs on a number of products, while Mexico said it would announce measures on Sunday. The White House argues that tariffs will lead to more investment in new manufacturing jobs in the U.S., while investors fear that the trade measures will spark inflation, slow economic activity, and harm companies that do business around the world. Target shares closed 3% lower after the retail giant reported better than expected earnings, but warned that consumer uncertainty as well as uncertainty around tariffs would weigh on current quarter results. Best Buy, BBY, one of my favorite tickers, I don't know why, shares plunged 13% after the electronics retailer released strong quarterly results, but said that tariffs would likely lead to price increases that hurt sales. Shares of automakers, which stand to be hit hard by the tariffs, also lost ground. Jeep and Chrysler maker Stellantis and General Motors each dropped more than 4%, while Ford shares fell nearly 3%. The financial services sector led the S&P 500 decline amid the uncertain economic outlook. Bank of America and Citigroup both declined more than 6%, while shares of Wells Fargo, JP Morgan, Goldman Sachs, and American Express also tumbled. The S&P 500 financial services sector index was down 3.5%. Shares of the world's largest technology companies turned in a mixed performance on Tuesday. Tesla shares, which have lost almost a third of their value since the start of the year, fell more than 4%, while Apple, Amazon, and Meta platforms also lost ground. AI chip maker NVIDIA, which had fallen nearly 9% yesterday, was up nearly 2%, while Microsoft, Alphabet, and Broadcom also gained ground. Among noteworthy gainers, shares of server maker Super Microcomputer SMCI jumped more than 8% after plunging 13% the previous session. Walgreens Boots Alliance shares gained 6% after the Wall Street Journal reported that the pharmacy chain was close to a roughly $10 billion deal to take private. Strategy MSTR, formerly known as MicroStrategy, and one of the world's largest holders of Bitcoin, soared nearly 10%. Bitcoin was at 87,500 recently, up from 81,500 early in the day, but down from the 95,000 level it hit yesterday following an announcement by Trump that a crypto strategic reserve would be created. The yield on 10-year treasuries, which tends to fall on economic... The yield on 10-year treasuries, which tends to fall when economic conditions weaken, was at 4.24% in late trading, up from 4.18% at yesterday's close. The yield, which affects borrowing on all sorts of costs, notably mortgages, fell as low as 4.11 Tuesday morning, its lowest since October. Gold futures were up 0.8% at $2,925 an ounce, while West Texas Intermediate crude oil futures fell 0.5% to $68.05 per barrel. Okay. All right. First off, I apologize for the reading errors. Usually I read these first, and so I'm able to be sharp with it. I have so many thoughts about this. The first one that I would tell you is that these tariffs that are happening on Canada and Mexico are not business related, I guess you could say. They're strictly to do with the safety and livelihood of young Americans. I think the number one killer for people 18 to 34 is fentanyl. Don't quote me on that. That's a range right there. But I think that's what I read. It was either 18 to 28 or 18 to 34. Well, guess what's coming across the border in an immense amount of weight? Okay, fentanyl. Guess where that's being made? In Asia, in China, and it's coming across both the north and the southern borders. So these tariffs are trying to incentivize Canada and Mexico to do a better job of preventing that. So essentially border security for drugs that are killing our young Americans. So that's the first thing. And by the way, I don't mean like, oh, there's fentanyl coming across the border. I mean enough fentanyl to kill every single person in the U.S. multiple times over. That's how much fentanyl is coming over. So yeah, sure, you could say, well, it doesn't matter if they have to take it for it to be bad. It's not coming over as just fentanyl. Okay, it's coming mixed into other things. So even our numbers on the amount that's coming over is probably wrong on the short side, meaning it's probably worse than what we think it is. Anyways, that's my first comment about this article regarding tariffs. The ones on Mexico and Canada are strictly for safety purposes. Also, I don't care about either of them as far as consumption goes. I am sure we buy many things from Canada. Maybe corporations buy things. But they're not the biggest producer of anything. There's nothing that they make that is so vital to operations that I'm threatened by it, right? That doesn't even concern me. It's all just news. A funny note on that, though, is that Trudeau, who, by the way, is on his way out at the end of the month here. I think that's when transition periods start for new prime minister in Canada. He called President Trump today Donald, which I think is hilarious. Who cares what you think about your politics, but it's pretty, that was probably meant to be offensive and I don't want to use the word threatening, but confrontational at the very least, to just try to bark that he's not afraid. But good thing is that his bite isn't strong at all, especially because he's on his way out. So it's kind of like yelling at someone while you're walking away that you're going to fight them. That's pretty much what Trudeau is doing. But along with Mexico, Canada, China is also getting some tariffs. That one is obviously a little bit bigger of a deal. kind of hard to assess until we hear what China's going to do. And I think even so, it's going to be good because since World War II, we have taken tariffs off of countries. And the whole process, or the whole thought process behind that, was so that countries like Germany and Japan could rebuild. Okay, we're like, hey, look, we know this is a rebuilding time for you. We're going to take off any tariffs, any offensive pressure financially from us to let you rebuild. Okay, that was then. And now it's time to be fair. With that said, it is very painful. It is very painful to see the market react as violently and as deep as it has on the way down. Okay. I fully recognize that. And half my job is therapy, in talking to clients about why this is just a blip in the system. It's a quick dip down. It's not the Grand Canyon. It's more like just a little hill. It's a little valley. Okay. And I have reasons, which we're going to go into right now, but I just want to try to hit home for you guys. Risk in general, in life, in the market, whatever you can associate risk with, has to do with perception. Okay. And your perception is what's going to dictate how you react to an event. So a lot of people perceive these tariffs, perceive the news articles, perceive Zelensky and Trump not getting along, Ukraine and America. They perceive that as catastrophic. And as a professional, someone who manages other people's money for a living, I have to do my very best to take my emotions out of it. And I have to try and be as objective as possible. And I compiled these 5 reasons that are objectively and verifiably good reasons why the tariffs are not going to be as devastating as people think. And also, I think they're going to be brief. And by brief, I mean, what is it? It's March now. 8 more months, 8 or 9 more months. I think my data that I compiled has to do with like December 31st as the close. So essentially 9 months from now. Okay. So that's the most important thing. Your risk is all based on perception, and every perception depends upon your environment. And if you can objectively remove yourself and look at your scenario from a bird's eye view and say, oh, the market is extremely volatile right now. Oh, but I have 20 years. Oh, I have 30 years, 10 years, 5 years. You should be able to take a deep breath and view this as a part of the ride. Okay. You should be able to do that. And here's the exact statistical reason why. 1, the average recession lasts less than 1 year. Okay, I think it's right around 10 months. The average bull market averages right around 4 years. I actually think it's 4.5, but I lowered it down. So we've already had multiple recessionary moments in the last 6 years. With that said, statistically, you're probably not in another recessionary period. Now, take my word with a grain of salt. Obviously, if there's a war that happens or something devastating like another COVID occurs, that's going to change things. But again, even when COVID happened, that first recessionary period I was referring to, that was brief. That was like 6 months. Okay. It's very temporary. And this is the only moment, and this will be the title of this podcast. Stocks are the only thing on earth where people do not like a discount. It's the only thing. So if you get one thing from this podcast, I hope it's that you try to look at every time you put money in the market, especially during a down period. Hey, am I in a really good company? And is the market down right now? Then guess what? I'm getting a discount because you aren't in the company for the next 10 months of return, most likely. Okay? You're in it for the 10, 20, 30 years of return. And that's what makes someone a really wealthy investor. Okay, so let me read my... And by the way, I wrote all these down and then I shoved them through ChatGPT because I was like, all right, I'm not going to edit this myself. So I threw these through ChatGPT to get edited. So they sound very professional, and know that it is not directly from me. It's my ideas and my sources, but ChatGPT did, brush these up a little bit, shine the shoes of these things. Okay, here are the 5 reasons why the 2025 Trump tariffs may not significantly harm the stock market. Number 1, corporate adaptability and supply chain resilience. Many U.S. companies have historically demonstrated agility in adjusting their supply chain to mitigate tariff impacts. By diversifying suppliers and sourcing materials from alternative countries, businesses can reduce dependency on specific regions, thereby minimizing potential disruptions. This strategic flexibility helps maintain operational continuity and supports stock market stability. Okay, that just means that companies are resilient. Number 2, potential benefits for domestic industries. Certain sectors may experience growth due to reduced foreign competition resulting from tariffs. For example, industrial companies like Rockwell Automation could see increased demand for automation solutions as manufacturers seek to enhance efficiency in response to higher import costs. This shift could lead to revenue growth within these industries, positively influencing their stock performance. Number 3, monetary policy adjustments by the Federal Reserve. Now, this is a big one. It's not my favorite one, but it is a big one. Number 3, monetary policy adjustments by the Federal Reserve. The Federal Reserve may implement monetary policies to counteract potential economic slowdowns induced by tariffs. Such measures could include adjusting interest rates or employing other monetary tools to maintain economic stability, thereby supporting investors' confidence and mitigating adverse effects on the stock market. Number 4, government utilization of tariff revenues for economic stimulus. This is probably everyone's favorite. The U.S. government could allocate revenue generated from tariffs toward domestic economic initiatives, such as infrastructure projects or tax relief. These actions can stimulate economic growth, offsetting potential negative impacts of tariffs and contributing to a more favorable environment for the stock market, i.e., he might get $5,000. Even though Doge said that $5,000 stimulus would be from saving money, this is also an avenue in which that could generate enough income for that. Okay. Number 5, historical market resilience amid trade disruptions. Historically, stock markets have shown resilience in the face of trade tensions and tariff implementations. While short-term volatility is common, markets often adjust as businesses adapt to new trade policies. This adaptability suggests that the long-term impact of tariffs on the stock market may be less severe than initially anticipated. Okay. Let's see. And this is ChatGPT added this. These considerations indicate that, despite the challenges posed by the 2025 Trump tariffs, various factors may help mitigate their potential negative effects on the stock market. And I'm already over my 15 minutes, so I got to be quick here. Those are 5. Oh, let me give you my sources too, real quick. Okay, I got CNN, ABC News, AP News, Reuters, Wall Street Journal, NPR.org, Goldman Sachs, Forbes, and Bloomberg. I don't know why I didn't write Bloomberg. I know I did Bloomberg. But those are my sources. So if you wanted to type those 5 things in and then type in those names, you'll come up with the articles. You'll come up with the white papers. You'll be able to see for yourself. Now, I also wanted to do something because, we got to talk about NVIDIA. Gosh darn it, guys. Okay, I'm going to be a little bit over the time here, but it's important. Okay, so let me just continue with what I wanted to talk about with the news here. So tariffs, very, very bad news, right? Terrible. Stock market reacts violently. Tariffs for the long term, for the number one consumer in the world, is good. Okay, it is. It is possible that we feel it briefly. And my assumption and my target and my math, my gut, everything that I've come up with, okay? And we use research tools like FunStrat. Tom Lee, I don't know if you watch CNBC, he's on there a lot. He's even more bullish than me. He thinks we could double by 2028. We could be at 7,500 by the end of the year. I think 7,000 is a more appropriate number. So that's what we believe is going to happen. These tariffs are going to be brief. They're going to be painful. And if you sell during these moments, it is my professional opinion that people will regret it quickly. Okay? There's something called discount bias, and it's actually hyperbolic discount bias. And I'm learning about this in my advanced degree from Yale that I'm working on, or my advanced designation. And it just is the simple concept that your day to day is more important than your day a year from now. And although that may be true, since today is unique, there's only one today, you're doing a disservice to future you by having this emotional reaction to money that you are not needing to survive. This money is meant to be for future you, okay? That is the best advice I can have, is view it like future you is needing these, okay? I'm throwing a whole bunch of stuff at you guys. I also wanted to just read some things. I took down 5 articles from Reuters, AP News, Wall Street Journal, MarketWatch, and Barron's. And these are the titles. S&P 500 and Dow end lower, dragged down by trade tensions. How major U.S. stock indexes fared Tuesday, 3/4/2025. Not very good. Dow falls as tariffs fear ripple through economy. NASDAQ flirted with correction as tariff-induced stock market sell-off continues. These stocks moved the most today. Tesla, GM, NVIDIA, Delta, Morgan Stanley, Supermicro, Target, Best Buy, and more. Not very good, though. Like, those are the titles. Okay, now I'm now reading this to you, and I got some new ones. Okay, Canada-Mexico tariff deal could be in the works, Commerce Secretary Lutnick says. Is this a time to invest in the stock market when everybody's fearful? Okay, those are 2 ones that just popped up that I follow, which I find to be hilarious because the news is going to tell you both sides because they just want clicks. Okay, they just want clicks. And I think about my own investments and the things that I've done, and in particular, 2016, I remember I should have invested in Tesla, and I was so close. I got $3,000 from an inheritance from a family member passing away. I know, big time, right? Big time. And I almost put all of it into Tesla. I knew nothing about Tesla. I knew nothing about any companies, but I was like, oh, Tesla electric vehicles, that sounds like a right idea. If I had done that, I'd have 6 figures in my account right now. Okay, but I was fearful. And instead, I spent it on dumb stuff that, a 24-year-old spends it on, or 23, however old I was. But I thought about it, and then I didn't do it because I was scared. I don't want that to be you guys, okay? Now, obviously, if you need the money tomorrow, don't do it. Don't do it. But if you have a time horizon and if you want to work with a financial advisor that can help you through these very emotional times, then you guys should do it. Okay, I'm going to do this in 3 minutes because this to me could be its own episode, but also I could explain it to you quickly in 60 seconds and then explain to you why NVIDIA is down. So NVIDIA's, I'm going to read, there's really 5 prongs of NVIDIA making money. It's their data center, their gaming segment. Let me just look at it. I wrote it down. Here. Okay. Data center, gaming, professional visualization, automotive, OEM, and other. OEM is like original equipment manufacturing partnerships. So they're just doing things for companies originally. It's sort of like someone comes to me and they're like, I want a unique portfolio design just to me. That's kind of what that means. Without getting too much in the details. There is some weeds there that I'm not going into. So every single one of these, except for gaming, beat estimates. Every single one. And even gaming increased 18% from the previous year. Okay. The data center segment experienced a remarkable 93% year-over-year increase, reaching $35.6 billion. This surge is largely attributed to the high demand for NVIDIA's AI chips, particularly the Blackwell AI supercomputers, which have been rapidly adopted by major cloud service programs. Professional visualization. This segment saw revenues of 427 million, reflecting a 45% year-over-year increase. Okay, this is the automotive segment, generated 329 million revenue, up 11% from the previous year. Overall, NVIDIA's total revenue for the quarter was 39.33 billion, a 78% increase compared to the same period last year. Okay, all that said, NVIDIA is down. Why is NVIDIA down? Okay, this is why NVIDIA is down. They are so good, and they will most likely beat estimates for the foreseeable future. But unless it is groundbreaking, earth-shattering, 9 out of 9 on the Richter scale, I don't even know how high the Richter scale goes, but whatever it is, the highest one, unless it is like that, it's not going to be market movement inducing for the stock. It's just not. These numbers are expected. Okay. And what's going to happen is this is a hold. NVIDIA is a hold. It goes through these periods of not a lot of fluctuation, a little bit of return, and then for 6 months, it'll just shoot through the roof. Okay. And the big part about being in it right now, even though we just had that big shoot through the roof moment with NVIDIA, is that with technology, it's not like progress over millennia, over hundreds of years, right? Like we have the Stone Age, then the Iron Age, Golden Age, the Industrial Age, right? All these periods of growth and progress, they took hundreds of years. But now with AI, with technology, that shrinks. And there's a term for this. I just can't remember it. It is rapidly increasing. It compounds. So something that might have taken 100 years in the past might only take 10 years now. And so being in the company that's at the forefront of that growth, yes, it is still very risky because it is technology, and technology, very volatile, very aggressive. However, it's also aggressive on the way up because everybody is using it. Everybody is using it. And so to not want to participate simply because they didn't blow earnings out of the water, even though they beat them pretty good, it just doesn't make sense. So NVIDIA is down strictly because they need to destroy every estimate across the board exponentially for anybody to be like, oh my gosh, this is the next best thing. Their stock, their market cap is already so high. They have to do crazy, incredible things. But guess what? They're gonna. They're the trailblazer, along with Palantir in that software department. They are doing incredible things. So that's why we hold NVIDIA even when it's not looking so good, because we do not know what's going to happen with them. All I know is people are buying their stuff. Okay, their revenue is increasing continually, even as the largest market cap company or one of the top 3. That's why you want to participate. Okay, you want to participate in those things. Okay, I'm done ranting. Again, the one thing out of this is that everybody loves a good discount except for when it's stocks. You guys are getting a discount right now. Okay, and it might even continue. Who cares if you dollar cost average on the way down? You're still going to get it on the way up. All right, so here's Permabull James. I'm a big fan of what's going on. I'm excited. I'm done ranting. 27 minutes of talking to you guys. I am so sorry. I hope you got something that you really liked, and share this with somebody, especially with someone who hates Trump, who thinks that the tariffs are going to cause World War III. Just share this with them. And excuse me, leave us a question or a comment. You know, we'll reply, and we'll try to we'll just try to produce stuff that you guys are looking for, because these tumultuous times are either going to make millionaires or they're going to make people really wish that they would have invested to be millionaires. Meaning either you're going to hit the ball or you never got out of the batting cage, right? And you sat there the whole time. Okay, that is it, guys. As always, invest early, invest often. Have a great one.